PayPal has dropped over 16% since its earnings a few days ago. And as investors continue to ignore it and sell it off and discount it, I'm wondering if it's a good investment for the future versus being a value trap. So in this video, let's do a deep analysis of PayPal, its recent earnings, its presentation, and see if it's a good value and good investment for your dollars. So stay with me. Please like and subscribe. That's all I really need from you guys. And let's get into it. So here I've pulled up the latest 10Q for PayPal and from their SEC filings. And their net revenues came in at 8.288 billion versus 7.885 billion a year prior. Operating expenses total was 6.784 billion versus 6.56 billion from a year prior. So they're keeping these in check. It's nice to see that the revenues increase more than in nominal dollars than the operating expenses increased. And the majority of their operating expenses comes from transaction expenses, which is 3.968 billion versus 3.942 billion, which is a slight increase from the last year. Operating income was 1.5 billion versus 1.3 billion, a slight increase there. And then net income came in at 1.261 billion versus 1.128 billion, so slight increase there. EPS diluted 1.29 versus 1.08. So nice to see. These are very steady numbers. This is not an amazing report, but for PayPal, this is a good, steady, stable report that you're seeing key increases in revenue, top line and bottom line net income. So this is a good report. Pretty solid, I would say. So let's move on and look at their balance sheet before we move on to their presentation, numbers, and seeing what they say in guidance. So assets, their current assets, 6.68, their cash and cash equivalents is 6.688 billion versus 6.662 year prior. And let's just go to the total current assets. Their total current assets or total assets is 79.777 billion versus 78.725 billion from the year prior. And then we always have to compare that to their liabilities just to see how healthy their balance sheet is. So their total liabilities here is 59.576 billion versus 58.308 billion. So increases in both total assets and total liabilities, but they definitely have more assets than liabilities, which is good to see. And then this piece right here is the equity piece. So they usually report that as total liabilities plus equity, and that should equal the same as the total assets above. Okay, let's move on to the actual presentation for PayPal. And here we have the snapshot of the second quarter 2025 for PayPal. So total, these are some of the key metrics that investors look at in PayPal's numbers. So total payment volume, which is TPV, came in at 443 billion, which is a 6% growth and 5% foreign currency exchange neutral. Revenue came in at, as I explained in the 10Q, 8.288 billion, which is a 5% increase from the year prior, which is a 5% also currency neutral, foreign currency neutral. Transaction margin dollars came in at 3.844 billion, which is a 7% increase. Transaction margin dollars on interest of customer balances came in at 3.526 billion, which is an 8% increase. And then you have non-GAAP EPS 1.4, 18% year-over-year growth. And adjusted free cash flow came in at 656, which is a negative 42% year-over-year. So overall, the total payment volume and revenue and transaction margin dollars, these are all going up mid to high single digits, which is usually how PayPal has been operating for the past few years. And nothing spectacular about these results, but also nothing terrible about these results. I would say like we looked at the 10Q, it's solid, stable growth. Now with PayPal, you always want to look at the active accounts and monthly active users and accounts and see what direction these numbers are trending. because those are very important metrics that investors look at when analyzing a fintech company like this. Active accounts was 438 million, which is a year-over-year growth of 2%. These are not very high numbers, but as long as it's not declining, because PayPal is in a very competitive space with Apple Pay, Google Pay, SoFi. There's so much competition from nearly everyone. You could have you could potentially make a case for PayPal being competitive with Shopify, Amazon, Apple, Google, SoFi, Klarna. These all are competitors for PayPal. So they're in a highly competitive space. So you're probably not going to see crazy growth as you saw in the revenue numbers and the other mid to high single digit growth numbers. And active accounts and total addressable market is going to grow slowly. But if they're executing right and they're executing on the correct things that users want, that makes users' lives easier, they should see at least low to mid growth year over year and quarter over quarter. So monthly active accounts, 226 million, year over year growth 2%. Number of payment transactions, 6.226 billion. Year over year growth, that's negative 5%. Number of payment transactions, PSP, unbranded, which is unbranded card processing, is 3.946 billion, year over year growth of 6%. Transactions per active account, TPA, 58.3, and that's a negative 4% year over year growth. Let's just look at the TPV mix really quickly across their platforms. So here you can see that PSP is 44% of that mix in the second quarter. And then the next highest one is branded experiences. So this is exciting because they've noted, the PSP, which is basically Braintree, Braintree's TPV is returning to growth, which is great to see. I think that we see that in one of their other slides here, and it's continuing to contribute to the transaction margin dollar growth. And if it's increasing its growth, then it's going to drive higher and higher transaction margin dollars as the quarters roll by. So two more things that I want to show is what are they doing to grow further, because they have such mid-low single-digit growth that you want to see as an investor or a potential investor in PayPal. You want to see what they're doing and what they're changing to grow further and increase the growth, not just stay in the mid and to high single digits of growth. So here on this slide, I see that they're scaling next-gen growth vectors. So they got agentic AI, which is building powerful agentic experiences with trusted commerce tools and partners such as Perplexity, Anthropic, and Salesforce. So they're not sitting back, and they're actually using the AI revolution to, use AI tools and services and integrate that into their services. So this is a great step. I think this is a great step, and it's long overdue. I'm glad they're working on this so they can use PayPal assistance and things to help people and drive more transaction margin dollars through their business. And then second, ads. Obviously, we learned about this a few months ago. But creating personal ads and storefronts where merchants and consumers can use a marketplace where there's ads being offered to end users or shown to end users, this is going to be huge, because ads are one of the, like we discussed before and I've discussed before in a previous video, advertising is a very high margin business because it requires relatively no overhead. You just have to build the software to allow merchants to connect with end consumers, and then you basically take a cut of everything in between. So ads are a really high margin business, and I'm really happy that PayPal is transitioning into that as well. And then they've been in the crypto space, but I think they're doing more here. So crypto and stablecoin, simplifying global money movement with PayPal USD, that's their stablecoin, their own branded special stablecoin, and the launch of Pay with Crypto. So these are major steps to, stay current with the crypto space and digital currencies. And the last thing I want to talk about in their presentation is their guidance. And this is always important to look at it, no matter what company you're analyzing for investment into. So here they're saying that, first let's look at the third quarter 2025, what they're anticipating. The transaction margin dollars is 3.76 billion to 3.82 billion, 3 to 5% growth, still mid-low growth. 5% to 7% growth, excluding interest on customer balances. Non-GAAP effective tax rate 18 to 20%. Non-GAAP EPS 1.18 to 1.22, which is, they're going negative 2% to 2% growth. And then GAAP EPS 1.14 to 1.18. Let's go to fiscal year, the full year. And they're doing about 5 to 6% there, 4% to 5%. April 2025 guidance. So they updated their guidance. So they increased the guidance from 4% to 5% to 5% to 6%. So that's good. They're showing slightly higher than what they guided for before. Still low single-digit growth here. Similar tax rate. Slightly higher EPS, which makes sense with that increased growth rate. GAAP EPS slightly higher. Free cash flow about the same. Nothing changed there. Share repurchase is still $6 billion for the full year, so that's great to see as an investor or potential investor in PayPal. And CapEx, they're keeping that steady at $1 billion. So now you may be wondering why PayPal dropped 16+% after earnings. Looking at these numbers, and these numbers are stable and slightly growing. So why is PayPal dropping? And the reason for that is multifold. There are a few reasons. The first reason is that the transaction margin dollars that PayPal reported are helped by a one-time partner expansion and renewal that helped PayPal with the transaction margin dollars. Another reason is that the branded checkout TPV, which is a really closely monitored metric for PayPal, it grew only 5% year over year, which is a slight decrease from the first quarter of 2025. And finally, the last thing that people saw and maybe overreacted with in PayPal's stock drop is that the management commented that there is a softening US retail spending and tariff-related headwinds in Asia, which all of this combined together led to a, just drop in the stock price. But all of the things that I mentioned as headwinds in PayPal and leading to their stock drop are not really structural or innate to PayPal. These are things that companies always face from time to time. And it doesn't mean that they're a bad company or they're not going to grow in the future or their prospects are just destroyed. For example, like tariff drama, that is affecting so many other companies besides PayPal. It doesn't mean that it's just PayPal's problem or it's unique to PayPal. So these are not structural things. So therefore, I think the PayPal thesis of recovery and growth, increasing growth, remains intact. So let's pull up PayPal on the stock valuation software and see if it's a good investment in terms of valuation, relatively and intrinsically. So let's pull it up on beardedinvestor.com. And so here it is. And, I've keep working on this software and a few other things have changed, layouts and formats and other things. But let's move all the way down to valuation, and here's the relative valuation section. And right now I've turned on peer comparison. So now it's comparing PayPal to other companies in the same industry and similar companies. So here I have SoFi, and first thing you'll notice is that trailing 12-month and forward PEs are much, much lower on PayPal than on SoFi. PayPal is trading at a 14.4 trailing 12-month PE and a forward PE of 13.6, whereas SoFi is much, much higher, many multiples higher. And on the surface, this is because several factors. SoFi is growing much, much faster than PayPal. It's a much newer company. It's fintech play that's like the newer generation fintech play. And PayPal has been around forever and in one form or another, and is just growing at a slow, steady, stable rate. So that's one reason that the trailing 12-month and the forward PEs are much lower. But that doesn't mean it's a bad company. It's just more stable. And then here we have EPS growth, and here we're looking at next year EPS growth of 10.3% versus 68.3%. Yeah, their EPS growth is hopefully growing steadily but surely. Huge difference in gross margins. There's a 82.2% gross margin in SoFi and 41.7% in PayPal. And then net profit margin also is actually pretty similar, 14.5 versus 18.5. So they're keeping, this is a measure of their profitability. So this is a very important metric to look at. And then other ratios, you can see that it's much, much smaller than, a lot of these ratios are much, much smaller than SoFi. PEG-PEGI ratios here, we have a calculator, and just because the earnings growth is so low based on the estimated annual earnings growth from analysts, the PEG and PEGI ratios are much higher. And as a reminder, PEG and PEGI, the closer they are to or below 1 is the more undervalued they are. So looking at this relatively, it almost looks like SoFi is a better value than PayPal. And as I get more competitors here to do a peer comparison, it'll be better to look at different competitors to PayPal. I do want to say that if they're able to increase their growth vectors, agentic AI and ads, and get that rolling, because these things are still in its infancy. They are just started doing these new vectors of growth. So I want to see those really mature, and I don't think these are going to be really accurate looking at the past, because they really started doing more like very recently. So these numbers, I don't want to really paint a picture of PayPal's growth, and I'm leaning towards the more optimistic side of PayPal. So this comparison might not be the best, just because analysts are not taking into account all these other growth vectors. We got to really see how those numbers play out. And after a few quarters of seeing the new services, new platforms, new growth vectors really been put into play, then let's go back and look at these relative valuation numbers and see what we can get. So let's move on to the fair value analysis, the intrinsic value. And so this might give us a better picture. And here you can see that I'm running a 10-year projection and using this very, 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 very low revenue growth percentage based on the analyst estimates and assumptions, with the initial free cash flow to equity of 5.6 billion. The result is $154.70, which is a 56.2% undervalued rating right now at the current price, which is really a really, really good return for PayPal investors right now. And then I'm going to run some projections here. So I have a bear case, base case, and bull case. And so the bear case is 5% below the revenue growth percentage of the intrinsic value of this assumption. And then the base case is the same, and then the bull case is automatically 5% above this. So you have negative 2.7% only growing there, or not growing, just declining basically. And then 2.3%, and then 7.3% growth, revenue growth. And it uses the same free cash flow to equity number in all three scenarios, but you can change that. And then I desire a CAGR rate of 10%. So this is a 10% CAGR rate over 10 years, each year. So in this scenario, in your projections, you can change any of these numbers and then run a 10-year, 5-year, 10-year, or 15-year projection. So for example, if I wanted a 5-year projection, I would just switch this to 5 years, and then it automatically calculates it for 5 years. And then let's say maybe negative 2.7% isn't realistic. That's just an automatic value that got plugged in when looking at the low revenue growth rate. So let's say this is 1%, and then base case is maybe let's say 5%. Oh no, let's say 5%, and then let's say bull case is 10%, and they really get their growth going because most of their numbers are between 5% to about 10% anyways. So this is very conservative anyways. And then let's keep the free cash flow to equity the same, and then keep this the same. And you can see that the fair value is 157.26 at a 5-year projection. And then if you see the bear case, all the numbers here are way higher than the current price. So this is indicating that it's severely undervalued, because this line right here is the 20% of the fair value, and this is 20% above the fair value. So it's well in the green. Whether or not you decide to buy it is based on if you think the moat, like if you think being able to Venmo somebody is a moat for PayPal. It faces so much competition. It needs a very strong buffer against all these competitors. So if you feel like that is intact, then this is a great investment. And if you feel like if Alex Chriss is steering this company in the right direction with these new growth vectors, ads, the agentic AI, leading Braintree back into growth, and other vectors, then this is a great investment for you. But on the flip side, if you don't feel like those things can withstand the scrutiny of competition or their moat, or if their moat is destroyed or being destroyed, then this may be a value trap. So you really have to look at it on both sides. Me personally, I am looking at this very interested in this. I don't have any capital to deploy to buying these shares right now, but if it keeps dropping, if it drops to 60 or below, I will be loading up on shares of PayPal in the public account. So thank you guys for doing this deep analysis of PayPal with me. If you have comments about PayPal or my intrinsic or relative valuations of PayPal, please leave them in the comments below. And if you want to see any other companies and their earnings analyzed, please leave those in the comments below as well. So until next time, guys.